Well, good afternoon, everyone, as we head into US trade on Tuesday, the 11th of July. And it is pretty much more of the same as we head into US as it was over the course of this morning. We obviously alluded to the data this morning: German inflation, UK labour market figures, and sterling continued to pop higher off the back of that, which we'll have a look. But we're seeing a slight bit of a pullback in the US dollar, a little bit of a move higher as we head into US trade for the day. But still, China propping up economic growth, or with the prospect of China propping up economic growth, increasing those stimulus measures that they introduced in November of last year in order to help the property sector. That's likely to keep markets potentially subdued, but tricky trade maybe into US CPI tomorrow. You can see obviously pound hits 15-month high after British jobs data, reinforces rate hike bets, which we were obviously speaking about this morning. Apart from that, there was no clear fresh headlines driving prices over the course of this morning. We can jump back to the grid and we can see stocks still higher, a little bit of downside across them off the back or after the open or post European Open, but you can see still pretty green across the board apart from the FTSE and the Nikkei. Now the FTSE obviously having a bit of downside off the back of UK labour market figures this morning, which we have obviously alluded to in an earlier video. Nikkei having a bit of downside, Japanese yen strength across the board continuing, likely to do with those US yields continuing to pull back, obviously with the Japanese 10-year yield anchored towards 0.5%, with US yields continuing to push lower. That then causes a decreasing of the yield deficit, which is then positive for the Japanese yen, and that continues to strengthen over the course of the last number of trading days. Apart from that, US dollar is mixed. Aussie and Kiwi are not moving in line with your stock indexes. You've got a couple of commodities higher here, as you can see. Slight bit of upside in oil off the back of Saudi Arabian and Russia supply cuts last week, and then obviously the Chinese situation, where obviously China is the world's largest consumer of oil. If measures are taken to prop up the Chinese economy, then if the Chinese economy does prop up, that causes increased demand for oil. So a couple of reasons for oil upside, maybe something worth paying attention to in the coming trading sessions ahead. But as I said, Aussie Kiwi not really going in line with these equity futures. Japanese yen not going in line with these equity futures. Things being moved about by external factors other than risk sentiment. So we can look at each of these assets a little bit more individually rather than looking at them together. Economic calendar doesn't provide much impetus for today's session either. We've got Fed's Bullard speaking in a couple of minutes. Apart from that, there's no high impact data over the course of this afternoon's session. Does that mean we get a slight bit of chop, not too much clear direction into CPI tomorrow? Or does the bounce back in stocks continue? Obviously we'll have to have a look. But in terms of the overnight, you got the RB&Z out overnight, not expected to hike interest rates, obviously due to the economy entering a technical recession since their last meeting. 2 consecutive quarters of GDP negative GDP prints, obviously contributing towards a technical recession. That is the technical terms for a recession, and is likely to prove a scenario where they do not hike interest rates, and that's what markets are anticipating. So maybe expect that to come with some commentary to say they're going to be data dependent, they'll keep an eye on the data, all that sort of stuff that the central banks like saying at the moment. So anticipate potentially a bit of a non-event unless they're going to hike interest rates, surprisingly, which is not something that is out of the question when it comes to central banks over the last month or two. Apart from that, CPI tomorrow, which will update further as we get into tomorrow's trading session. We can see the Aussie pushing lower, Kiwi pushing lower, Euro and Cable also pushing lower. Dollar Swiss had a little pop higher, Dollar CAD popping higher. So a little bit of a bounce back in the dollar over the course of the last hour or two. Does that continue into today's session? Obviously we'll have to see. Slight bit of a bounce back in yields. The last candlesticks, or the current hourly candlesticks, are making a slight bit of an attempt higher, but it really is just a counter move slightly to the previous move. So I wouldn't read too much into that just yet. If that does continue over the course of today's session, maybe that is of note into tomorrow's CPI, where as you can see, 4-hour candles clicked there over the last couple of hours. A slight bit of a bounce back against across the 2s and the 10s. Oil continues to remain elevated up at 73.50, 74, obviously due to the reasons that I have just pointed out. But Aussie yen, CAD yen continue to cruise lower, and a bit of Japanese yen strength to continue maybe isn't a bad way to play it. But stock indexes across the board continue their bounce back. The DAX through the highs, more recent highs, posted earlier on this morning. The S&P through recent highs posted this morning. Same with the DAX. The Nasdaq is making an attempt. The FTSE remains kind of subdued down there, but that's obviously due to reasons that we have earmarked in earlier videos. But slight bit of a bounce back in indices. Maybe liking this bit of a pullback in bond yields. US dollar proving supported, which market's a little bit discombobulated at the moment, but that is understandable when you take into account the CPI print tomorrow. But yeah, that's really what we've got to go off in terms of the US session. No fresh headlines, same story as this morning. The market's having a bit of a bounce back in line with the news flow from this morning. So let's see how the US open up in half an hour's time. Do they continue on in this direction, or do we get a bit of a reversal, and does this downside from last week kick back in? Markets are positive at the moment, and when markets are positive, that's normally the side of the fence that you need to sit on.